Hey everybody, this is Rob Keynes from 𝙂𝙊𝙇𝙀𝙍.com. This is the Mining Stock Mondays edition. And what we're going to look at today is finally the Fed's Powell releasing the label of transitory from inflation and admitting that it's persistent. Of course, we know that because we've been following commodities prices and producer prices all year long. And then finally, those reaching the end consumer and the consumer price index, the CPI, which has been inflated for several months, reached a 6.2% print, which is the highest in 30 years. Last month, and of course, by the time you see this, we should be getting news on the CPI print for November. So this is going to be very timely discussion. We're going to look at what higher interest rates mean for gold, because the Fed is hinting that not only they're going to taper, but they're going to raise interest rates to deal with inflation. Is rising interest rates good for gold? We show you it is good for gold, and gold tends to do well in a rising interest rate environment. We've got research for you on that. And then, of course, most importantly, since it's Mining Stock Monday, we're going to talk about another mining stock target for you guys. I'm bringing to you a company that has a really good management team that's in an excellent district and that's got a lot of support early. We'll go ahead and get started with that. Let's go to the share. We're going to start with the news in Bloomberg that from November 30th, Jerome Powell ditches the transitory tag, paves way for a rate hike. So now they're openly talking about doing rate hikes. Now, the last time we saw the Fed officially talk about this, a lot of the Fed governors said it may be June or July of 2022 before we start to raise interest rates. It seems to me that they may be considering pulling this forward, and they're prepping the market for that so that the market can kind of price that in. That's what they're doing. A lot of times they float these trial balloons over their potential policy actions and see how the market reacts. And then I think they use that to actually decide what they're going to do. So it's here in Bloomberg. Fed chief tells Congress he's open to faster bond buying taper. That means reducing the amount of bonds they're buying. Now, they're not talking about not buying bonds anymore or actually dumping bonds back on the market. They're just reducing the amount that they're buying potentially. And actually, they've just lowered the cap on what they'll buy. So we'll see how much tapering actually takes place. The markets see a hawkish turn, more chance of early rates rise. Of course, the Fed governors did talk last time about raising rates, but I think they're going to pull it forward. So what does all this mean for the precious metals? That's why you guys are here. So it's a really neat article on Gold Money that talks about it, rate hikes and what it means for gold. Excellent article from back in 2017. It went back and studied it, but there's an important chart that I want to show you guys, and it's this one right here, figure 3. We identified 23 rate cycles since the demonetization of gold in 1971. And the blue is a rate hike cycle. So these blue bars you see here, that's when rates went up. The gray is a rate cut cycle, and then here's the gold price. And you can see during rate hike cycles, especially this big one from 76 to about 80, gold did very well. It had actually a very strong rise in price. Of course, it did between 71 and about 73. And of course, it did between about, I would say, 02 and about 08. So it's done very well. Now, since 16 on, it has done okay. We haven't seen the big rate increases from the Fed yet. But when we see those, we expect it to go up because history says that rate hikes can be very bullish for gold. Why is that? Is that counterintuitive? Well, because when you have rate hikes, it means you already have problems in the system. Typically, it means you have high inflation, or it could be they think the economy is doing so well, they're going to raise rate hikes in anticipation for the next deflationary issue or recession. And so in either case, gold tends to go up because more people are investing in gold. So I think it's very positive when rate hikes go up. Now, I've seen research dating back 100 years that shows, rising interest rates is not necessarily negative for gold. It more has to do with demand for gold, economic fundamentals. So interest rates really don't either way necessarily affect it, but gold tends to do well during rate hikes simply for the reason that people see the inflation that typically accompanies those rate hikes, and they invest in gold, and it does very well. So that's the important lesson to learn here. And I think I'm not wary of the gold price going forward as the Fed takes a more hawkish tone, as they reduce their taper and they raise interest rates. I think that's extremely bullish for gold, because I think it's reflected again what really affects gold's price are the economic fundamentals, the debt that we have, the monetary creation that we had, especially since 2020, and all the other reasons, the creeping inflation and the problems with the bond markets. All right, now we want to talk about the company that I want to bring to you today, Prospect Ridge Resources. They trade on the Canadian Stock Exchange under PRR. They've also gotten listed on the OTC under PRRSF. They're in the OTCQB. It's a very liquid market. I've traded the OTC before. I've written articles about stocks that trade on the OTC seeking alpha for years. Definitely not afraid of them. It's a good market to be into. So if you're in America and your brokerage doesn't have access to the Canadian Stock Exchange or the Toronto Venture Stock Exchange, where a lot of these junior mining explorer companies exist, you can trade them on the OTC. I recently did a keynote presentation on the OTC markets. I want to say back at the beginning of November about this time it's different in gold and silver. So I have a relationship with the OTC market and I appreciate them. I think they do a lot for the resource industry here in the US and in Canada as well. And I fully encourage you to take part in that. Of course, do your own research when you do that. The main thing that I want to talk to you about in Prospect Ridge, well, we'll read their company statement. We focus on the acquisition, exploration, development of precious metals projects in North America. So that's what they are. They're trying to develop new projects. They have a couple of projects we'll talk about here. We'll go over the investment highlights in a minute, but I want to highlight their management. The most important thing about a mining stock or a mining company and the performance of their stock for you as an investor is management. And then you go to things like jurisdiction, deposit quality, and things like that. But management's number one. Well, their CEO and director, Michael Iverson, has 30 years of experience. He founded NeoGold Mining Corp and co-founded Fortuna Silver Mines. Those of you that have followed Fortuna know what a great company it is. And he went and served various roles in there, including CEO, chairman, and president. Since he left, he's at various executive positions at Volcanic Gold Mines. And at NeoGold, he led the acquisition and exploration of a large land package of 𝙂𝙊𝙇𝙍, following which the company was acquired by 𝙂𝙊𝙇 Mining Corp, now operating as 𝙂𝙊𝙇 Mining. Anybody know who 𝙂𝙊𝙇 Mining is? Okay, those are big names. He's got 30 years experience, 1 billion market capitalization of all the companies that he's run, and he's raised $100 million to help these companies reach their goals. So definitely a great get there. You've got Nick 𝙂𝙊𝙇, his 15 years experience as a business owner, senior management, and capital markets. So you get your capital market experience. Liam Corcoran is also there, legal and business experience, and a partner multidisciplinary legal practice. So they're putting all the pieces in place that you need to run the team. Of course, Jacques Burnell, Canadian businessman with over 30 years of experience in North American mining industry. His roles in executive levels as president and director of publicly traded companies. He was involved in NeoGold and 𝙂𝙊𝙇 Mining as well. And they have a good geologist team. 𝙂𝙊𝙇 has a lot of geological experience ranging from a large part of Western Canada, many gold mining operations. He founded Higher Gold Exploration Services, so he has his own company there. Then you have 𝙂𝙊𝙇. He's a prospecting professional, so he's good at the prospecting stage of the process where you prospect out and see which areas may, have the gold, and then you do your additional exploration from there. So he's had experience. Their projects are the Holy Grail and the Galinee Project. The Holy Grail is the one that we're really going to focus on, but Galinee has some interesting potential there as well. And I'm going to walk you guys through parts of the presentation, and I'm going to kind of break off and then go to some external information as well to walk you through it, and then just kind of talk about it. And then I'll summarize it at the end, and I'll talk about the pros and cons, the risks of owning this. But I think where a lot of things are de-risked right up front here is the management of the company. So the Holy Grail property is located in Terrace, British Columbia, and it covers approximately 70,000 hectares. That's a really big property. They're in this, what they call the Holy Grail, or some people call the Golden Triangle, if you will, their region of gold. Seabridge Gold has a 1.7 billion market cap on the KSM mine. They're a 1.7 billion market cap company. Pretium Resources has the Brucejack mine there, 2.25 billion. Ascot Gold has Premier and Red Mountain mines, 450 million market cap. Tudor Gold, Treaty Creek mine, 420 million market cap. GT Gold, 393, sold to Newmont. There's a big name there. Skeena Resources, 970 million market cap. Snip and SK Creek past producers. And Newcrest Mining, 70% of Red Chris mine for 140 million. So we're talking big deals here. This is the area that the land is at, the Prospect Ridge has. It's had a lot of big discoveries. So good management team, good jurisdiction. We can see the ingredients coming together. They are doing a property scale LiDAR survey. It's a type of radar that goes over land, especially when it's hard to do it because it has vegetation on top. And instead of raising all those trees, and then drilling your holes, what they'll do is they'll do this LiDAR survey, some some geological surveys, some rock samples, things like that to develop their targets. That's the stage that they're in right now. There's two phases: reconnaissance using new and existing logging roads, and focus prospecting with helicopter support in target areas. They're doing UAV surveys, that's basically drones or unmanned vehicles, and so soil sampling. And then they're going to do a drill program as well. They're trying to raise 100,000 for a drill program. We'll talk about that in a minute. So here's basically what they have. They have samples of gold, 9.3 grams per ton, 984 grams per ton, 57.34 in 𝙂𝙊𝙇𝙿. Of course, they're also doing work in 𝙎𝙄𝙇𝙑𝙬 and the Legend, but they've got really good samples up front. So they know they're in rich territory. They're getting good samples. Now they're doing some additional prospecting, the LiDAR and things to try to find where that gold is. So they're doing a LiDAR survey. They're doing reconnaissance silts. That provides them a data on geochemical makeup of the ground and whether it's going to be positive for precious metals and other elements. They could get other base metals out of this. So this could be a polymetallic situation. And they're also doing soil surveys. Channel sampling program at Holy Grail and prospecting soil surveys. So they're in the earlier stages of exploration, not quite to drilling yet, but they'll get to drilling eventually. Now we're going to talk about the Galinee Project. It's 250 kilometers northeast of 𝙂𝙊𝙇𝙬. And it is located near 𝙂𝙊𝙇𝙬, Quebec. You can see it right here. The collar, the most notable historic drill hole of the Galinee Project. C1 is located here over the next 12 months. So basically right here. Prospect Ridge intends to spend $100,000 exploring that one. I want to get a little bit more into the Holy Grail here. Here you can see all the companies that were involved, and here is the work that they're doing: the LiDAR, the reconnaissance, the prospecting. There's a 43-101. Now, the 43-101 report, you can do a 43-101 basically at any stage, at the earliest stage of exploration. But what it is 43-101 is the compliance with the government for how you're reporting this. It gives you assurance that what you're reporting about this project is accurate. So I'm not going to go through this thing in detail, that this is what you want to see. They're on it early with the 43-101. With a lot of these early stage companies, you don't see them starting to put together technical reports, but good run companies will do this at the very beginning. Why? Because what's in here is they're defining the geology, the accessibility, the mineralization, the samplings, their drilling program. You can see here on page 30, all of that up front. You know that they're serious. If you get into an early stage company and they're not doing a 43-101 and they have all financial professionals there and no geologists and people that haven't run mines before, that's a sign that maybe this company really is just looking to hit a prospect and sell it off to somebody. It's not really a serious company, right? Maybe they're collecting funds and they're getting their stuff together. When you see a company with a management like this in an area like this is doing early on 43-101s, what that means is they kind of know what they're doing. They're getting this organized from the very beginning. They're talking about the claims here and defining that for you. That's why I wanted to bring this to you guys. When you see those kind of reports early, that means the company's pretty serious about what they're doing. They're spending money on that. The 43-101 reports are not cheap. It takes a lot of work, and there's a lot of regulation around how to produce those, and it takes experts signing off on that that are degreed geologists that can sign off on that as a qualified person on that report, which means, the company has all that they need together. Of course, here's the Galinee Project in Quebec. That's earlier stage. We really don't know what we have there, but we do know what we have from 𝙂𝙊𝙇𝙬. So here is a news release recently from the company on their website: 117 grams per ton gold and 578 grams per ton silver within a 13.5 kilometer linear fault zone, averaging 30 meters wide. What does all that mean? Well, 117 grams per ton gold is very darn good. At surface level, a lot of mines can make money at a half a gram ton for gold. We're talking 117. Now it's a sample. They haven't drilled down to define what they've got yet, but when you get those kind of samples, you're on the gold, and that's the important thing. They're also 578 grams per ton silver. That's pretty darn good silver. So you could either, if that were to hold throughout their project, either the gold or silver, you could mine either and it'd be profitable. They have both in their early sampling. So that's definitely a good sign. You can see a picture here, basically of them showing you the gold throughout the rock here. You can see all the gold. You can see some flecks here and here of the gold. And I'm not a geologist, but I have looked at a lot of samples. And when you see flecks like that, you're right at surface, you're doing pretty good. Now what they got to do is go define where those veins are. Anyway, they've got all of the information here. They're also finding 3.9% copper, 9.55 lead and 4.84% zinc. Those are all excellent grades of the base metals. And here's what will happen. The base metals typically, when they do their PEA and their economic analysis and their feasibility study, will be used as byproduct credits, meaning it'll lower the cost to get the gold and silver out of the ground. Now, sometimes the base metals, in fact, a lot of times, especially with silver, the base metals are worth more and they're more prevalent than the silver. In this case, they've got good gold and silver so far, and they're also finding copper, lead, and zinc, which is going to lower their overall cost of production of precious metals. That's always positive. Copper is at a 10-year high in price. Zinc is at a 14-year high. Lead's doing just fine. The base metals are doing just fine. So it's always good to have that. Here's a sample table on the news release. And the reason I bring you all of this information, dive deep into the weeds of these companies, is to show you what they're finding and what the prospects could potentially be. It's important to pay attention to this. When they're early on finding this kind of stuff and they're defining it in a 43-101 report, these are good signs. These are good signs of why you may want to get involved in a company. It lowers your risk. This is an aspect of de-risking a project for you as an investor. Here's a nice report on Yahoo Finance about them discovering visible gold at its fourth confirmed zone from foreshore, return up to 21.3 grams per ton gold and 12 grams per ton gold over 1 meter. And here you can see pictures of the rocks that they're pulling out and the samples from the southeast extension. Here is a nice, the nice color chart, I call it. This is what the geologists look at, the pretty color charts when they're trying to determine where to do their next sampling and then where to put their drill program. So this is basically showing you where they're finding that. So in any case, they're doing pretty well. Here's something I got from the company in terms of the visible gold that they're seeing in the rocks. And you can see right here, you've got some visible gold and silver. You can see the quartz, of course. When you see this much quartz in the rocks, usually gold and certain formations will follow the quartz, silver as well. So they're finding the quartz, they're finding specks of it actually in the rocks as well. And again, these are just samples on surface. Now, they're going to have to commence their drilling program to see what's next. And that's what they're doing. What they're doing is they're raising money to do that. Let's go back to the deck here for a moment. I want to talk to you about, is it good to get involved in an early stage company as an investor, given this share structure? We already know they have good management. We know they're in a great jurisdiction. We know the early sampling on the ground is very, very good. We know that next they're doing their surveys, their LIDAR surveys, and their soil samples, the early geotechnical work that they need to do to define that asset and where they're going to start drilling and really define, how many ounces they have. Is it good to get involved in these? Well, like I said, you have all those positive things, but the next thing you look at is how many shares do they have? Well, right now, fully diluted, they're sitting at about 59 million with zero debt. They have outstanding 8,600,000 warrants, a lot of those at $1.50. And we'll see in a moment what they're trading at. And they have options about 3.4 million. Overall, that's not bad for a company that's on a very positive zone that's trying to raise money for exploration. So in other words, they're not over diluted at this point. They're not sitting at 300 million shares. So you get in as an investor, you can reasonably expect that this company has taken care of their financial position. They know how to run this thing. Of course, we know from management, they know how to. Now, they do have an investment opportunity. I'm not involved with this directly, meaning I'm not brokering any deals, but it's in their deck. So I just wanted to highlight it for you guys. If you want to get involved and you're an accredited investor, they're looking to raise 10 million to do additional exploration. It's in their deck. You can go to their website, contact them directly. Don't contact me. But it's about $1. They want to get up to 17 million units and get about $10 million. And they're going to add a warrant at $1.50. So they're not trading that far off of $1.50. Let's go to the chart. So here's Prospect Ridge Resources trading on the Canadian Stock Exchange. And they're doing pretty well. Right now, they're sitting at $1.42. They've done well this year. Earlier this year, they're trading at about, well, let's see if we can get a full screen chart, and we'll do a better job of tracking the price. So here you can see them basically getting additional listings, increasing their volume. They've done very well over the last year. This is a year to date. If we do a 1-year chart, they've done very well, especially over the last 6 months, 3 months. It's performed very well. You can see the volume here. They've had a lot of volume of trading, so there is volume for them. Now, of course, people buy and sell as you go along, but overall, it's a net positive. If I were to draw a line on a longer term chart, it's a rising wedge formation, higher highs and higher lows. That means people are interested in this. And for a company, early exploration, to have this strong of a share price, the reason they have that strong of a share price is because you're going to have a lot of institutional investors and insiders, but the retail support for this stock is up because What determines really the share price is how many units you have outstanding and how people are trading in the secondary market and the regular stock markets. It's trading very well. It's very supportive. People like the company. And for an early stage project to be priced at that level means they haven't over diluted. There's a lot of strength in it. People like the results. They believe in the management team and the jurisdiction. That's how you have a $1.42 share price. It's not 23 cents, not 84 cents. It's $1.42. There are reasons for that. So this is the company that I wanted to bring to you guys. Now we bring you prospects on Mining Stock Mondays from across, the spectrum of mining companies. We focus on gold and silver. We look at early exploration all the way up to people that are about to build the mine, all the way up to people that are already producing and exploring and trying to develop, new projects. Why I like to bring you early stage companies is this. We know we're hitting the gold cliff starting in 2027. Crescat Capital, 𝙎𝙊𝙇𝙍𝙍 put out that chart, 2027 of proven and probable ounces. We're going to have a shortage pretty soon. We're already in silver shortage. I've documented that on the channel. We need to identify our next ounces. We need to get earlier in the supply chain and support these guys if we want ounces in the future years for us to invest in. It also could be a good investment opportunity. Now, talking about risk, there's risk in early stage exploration. There's more risk earlier stage than there is for a company that's already producing and you know what's there. Why? Because you don't know that they're going to be able to prove out that resource. But the elements that are de-risking Prospect Ridge are great management team that's done it before, have a fully developed management team that has finance professionals, geologists, business professionals, mine runners. I mean, they have the whole thing. They're in a great district, the Holy Grail area, that has multi-billion-dollar market cap companies making finds. They're early on in the project finding excellent rock samples. They're getting good support from the market to raise more money to go do further development. And what's going to come next is you're going to start to see the news cycle. You're going to start to see them get results as they raise this money and apply it to exploration. They're going to start printing results, and that's going to help buoy the share price. Now, we expect the share price to rise and fall as they go. That's normal for a mining stock. But where we look at them on the Lassonde curve is early on, good solid price support. That means as they progress along that Lassonde curve, as they go up in maturity, realistically speaking, they should have a good chance of holding that share price and increasing as that news comes out. So is there risk in an early stage company? Yes. Has this in some aspects been de-risked from our perspective? The way we look at mining stocks, yes. This could be one that you hold, and it could be, could be a 5 or 10 bagger potential there if they have a big find. Because when you get in these early stage companies, you have that 5, 10, 15 bagger potential. Now we'll have to see what they get. Not saying that's there, but that's where you get it. If you invest in later stage companies like the producers, people that are mature, you're not going to have that upside potential. Okay. So it depends on what you want for your portfolio. We like to mix in some of these earlier stage ones. We know that we need the gold and the silver, and the base metals, heck, are doing very well as well. But we also know that this could be good investment potential for you if you consider this for your portfolio. So talk about the risks there, the pros and the cons. I like this name. I'm going to follow it. I'm going to put this on our mining stock tracker for those of us that support us on Patreon at the mining stock level. Go to patreon.com/goldsilverpros. We follow mining stocks there. I'm going to add Prospect Ridge Resources to it. I'm going to follow it for the next 3 to 6 months just to see how they do and keep updates. If they keep putting out good news, I'll continue to bring you guys updates on the channel as well. All right, that's going to do it for today. Mining Stock Monday. To recap what we talked about, we expect the Fed is going to pull forward interest rate increases sooner rather than later. Remember, last month I said they would do exactly that. That's another prediction I said that's come true. They're going to raise rates faster than they said before because their hands are going to be tied because of rising inflation. I said it a month ago. 30 days later, I was vindicated. And I showed you research from Gold Money that gold tends to do very well in a rising interest rate environment. Contrary to what a lot of people believe, you don't need lower negative interest rates for gold to do well. It does just fine because higher interest rate hikes or interest rate hikes by the central bank are often reflective of what's going on in the base of the economy, which is risk. And we have a lot of risk right now. And then, of course, I brought you Prospect Ridge Resources, a good early stage exploration company that looks like they're on it. They're on a project, looking good, good management team, good area, some de-risking there, strong share price, low share dilution, an opportunity if you're a credit investor. If you want to get involved, contact the company, not me for that. But there's a lot of opportunity there for you. Looks like, potentially a good target for you guys. I'm going to add it to the tracker again for those that support us on Patreon. All right, this is going to do it for Mining Stock Monday. Rob Kienzler, Gold Silver Pro. See you guys next time. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.